For now, the best we can say is look at the mid-caps, by the way. Don't lose sight there. As I mentioned, the real damage is beneath the surface. The mid-cap index has now started to fall once again. Yesterday, there was big carnage in mid-caps, and today, once again, the mid-cap index is down 0.2%. But Rajat Rajgarhia of Motilal Oswal joins in to take us through what he has made of all the recent developments in the market. Rajat, hi. Good morning. Happy holidays to you and your entire team, whoever is on leave from Motilal Oswal. And thank you for speaking with us today. You know, it's just bad news galore in this market. First, it was demonetization. We had a whole host of global cues to reckon with. And now this latest news flow about how FPIs could be taxed additionally. What's the sense you're getting about the direction? Do you think the market direction will continue to be on the downside, at least up until the budget?
Hi, good morning. Right now India is just being singled out by investors in terms of significant outflows that we have seen. Just in this quarter till now, we have seen net $4 billion of selling just in the equities, bringing down the total year inflows to just about close to $3 billion. That's very low, and the markets are kind of reflecting that. I think we are into right now a fearful environment where even if news may not be true to an extent, the damage that noise creates is significant. But the core of this entire fall is the near-term pain or the near-term slowdown that we are seeing in the economy, in the corporate earnings, which the markets are just trying to adjust to right now. Whether that near term is 1 quarter or 2 quarter or 3 quarter, that is what markets will try to figure out. But right now, that fearful environment is what is knocking down the markets and the stocks down.
I will revisit that topic, Rajat. First, good morning to you. Thank you for joining us. In what's a quiet period, it's becoming a bit of a problem to invite guests, most of whom feel that the markets are on a holiday and they would like to take a holiday too. But you know, your note has one very interesting line. Demonetization is an unprecedented reform undertaken. This is going to have a bearing on the investment frameworks in the near term and could drive several changes in portfolios. Could you flesh that out? What would be included, what would be excluded because of what you say, a change in investment framework?
Look, this whole concept of bringing a significant part of the informal economy into the formal mode is going to create a lot of changes. Secondly, we are going to see the formal financial system getting far more stronger than what it has been into the sector. Third, there always has been significant amount of purchases, or even in the high ticket consumption, where cash component has always been pretty significant. I think we are basically trying to articulate that many habits in this country will undergo a change if this trend were to persist, and because of those changed habits, investment portfolios or investment frameworks will also change. So that is what this note essentially refers to.
Okay, if you could just elaborate that, therefore, in terms of listed stocks. As you say, as you get the informal sector into the formal sector, it's quite possible that some elements of the informal sector will die away because they are not used to paying taxes, and that will eat up their margin. Therefore, will somebody in the formal sector benefit? After all, the informal sector is not listed. So who will be the beneficiaries in the formal sector?
Like in the formal sector, I think first of all, the banks which are very well updated on the digital framework, right? They will be able to take a part of the large wallet share spending which is going to come into the system. Secondly, if you just look at the amount of money which was lying at the average household level moving back into the banks in form of CASA, they stand to gain out of it. Thirdly, I think some of the NBFCs where their expertise has traditionally been to assess a non-tax paying individual in terms of giving loan, right? I think some of them will have to reorient their business models just to again come back that if the formal system of lending is going to gain a larger ticket share, then how do they cope up with it? Real estate, I think while it's a consensus that whichever markets in real estate have a cash component of business, that market is going to face challenges. And then I think as the government keeps unveiling more and more measures as a follow-up to what they announced on November 8th, we will see more clarity on which sectors investors would like to focus on.
Okay, I'll come back to the sectors in a bit, but you made a very interesting point earlier when you talked about how this market is engulfed by fear. And you know, we've seen in the past how fear psychosis really tends to derail the market, at a very fast pace. Do you see this market revisiting the earlier budget lows of around 6,900 to 7,000 because of this issue?
Look, if you just assess that the markets on a market cap to GDP ratio goes back to the lows that we made in Feb 2016, then even at a 10% higher Nifty level, the market cap to GDP will go back to those lows, right? Because while absolute levels do matter in the mind of investors, whenever you talk about new lows, one should look at the valuations, right? So the 7,000 of Feb 2016 will be equivalent to a 7,700 of Feb 2017, just because of the sheer nominal GDP growth of almost close to 9 to 10%. So I think we are not too far away from that. Whether the additional fear or the more selling can take markets even below that, then yes, in the near term anything is possible. Frankly, I was surprised when the market touched 7,000 in Feb 2016 also. But please do remember, a lot of global environment was also unsupportive then. Today, globally, a lot of the markets are at their highs and India is still underperforming.
Okay, well, that point is taken. So where do you go for refuge, Rajat? At a time when you say that 7,600, which will be equivalent to 6,900 of February 2016 is possible, in the very least, where do you hide?
Well, you first of all, I think whenever you have times like this, people typically tend to focus more on large caps than mid caps, because as you were just mentioning earlier that the selling intensity in mid caps can take stock prices much lower. But more importantly, I think there are companies which have always come out better. If you look at names like HDFC, Infosys, L&T, I think many of these names, in all these cases, we probably will be talking about whether the growth is 5 to 10% and not 15%. Unlike spaces where you can talk about whether the growth will be minus 10% versus plus 10%.
Okay. What about some of these sectors that have seen the biggest brunt of demonetization? Sectors like commercial vehicles, cement, other auto companies. Is the worst already in the price, and are there any stocks that look attractive now?
So they are cyclical, right? So they will always tend to overreact. Till about 6 months back, cement was the most consensus trade. Large caps at $230, $250, mid caps at 100, 125. At least that valuation froth is over into these names now. I think some of them are probably getting into a buy zone from a price point of view, but I think from a time point of view, maybe you would like to wait sometime in Feb, see through the budget, and you may be more comfortable buying them 5-7% higher, but maybe into a more certain environment. And also you don't know that 5-7% higher is from the today's price or from a price that they fall further in the run up to the budget.
How much have your overall earnings growth been cut by? And can you take us through the sectors that your focused funds are exposed to?
So Lata, if you look at our research team's estimate compilation that we have done just about some time back, the earnings cut was very, very moderate, purely because that more than 40% of the earnings are non-exposed to the domestic business. So these are essentially commodities, technology, pharma, oil and gas, etc. So there the earnings have been relatively resilient. On the remaining 60%, I think we have seen some cuts, but those cuts have not led to an aggregate cut of more than 2 to 3% for this fiscal year. But I think what markets are going to be fearful about is FY18, not so much about FY17 now, because FY18 estimates And I would like to give benefit of doubt to most of the sell side estimates here, that the FY18 estimates still are very high at about 18-19%, because we just don't know how much further decline to moderate because of this slowing down in the near term into FY18.
Fair point. Just one word on mid caps like Bata, Arvind, TTK, PVR and Inox Leisure. You are building in sharper earnings cuts. Why?
Yeah, because a lot of them are discretionary, where suddenly in 3Q, once you see footfalls down by suppose 5-10%, these are the spaces where actually you will see a decline. And whenever you have a decline in the volumes, the negative operating leverage comes and does a damage to the EBITDA much
TTK
more
Prestige
for many
and
of these
Bata,
companies.
I mean, Rajat, they are relatively, cheaper priced durables, isn't it? And a pressure cooker, you would buy if you need it, wouldn't you? Or even for that matter, the Bata level of slippers, largely Hawaii chappals and, walking shoes, or even school children going shoes, even those would be affected. Those are necessities, I thought.
Look, while a lot of the items are necessary, in each of these items there is still a discretionary element which is always there.
Sure.
Right. And I think just because of the sheer crunch that we have seen in the circulation of money in the system, you will see a couple of months of disruption in most of the discretionary items.
Okay. Just one final word from your end on, what the Motilal Oswal view is on the possibility of the long-term capital gains tax. And even if that doesn't come through, some taxation changes for equities in the budget, like, the short-term capital gains rate going up or the holding period going up. If that does come about, how do you see the equity markets take it?
Well, right now we do not have any view on what is going to happen, because this is something as recent as a Saturday event when the noises have started coming around. But I think any such event, if it happens, the markets will typically tend to discount it on the run up to that event, given that every news channel, every media is talking about it, and that is the level of fear that we are seeing. I think once that event is out, the focus will start shifting back, whether the earnings is coming back or not. But these aspects will get discounted well before Feb 1st, right? After Feb 1st, the focus will be where is the growth.
Okay. Well, don't blame it on us. The Prime Minister made that statement. The CBDT released the circular. We didn't put it out of a rabbit's hat, but or pull the rabbit out of the hat. A final question to you, Rajat. What is actually the dealing room chatter now? Are not retailers phoning and telling you, okay, Asian Paints is attractive, Maruti is attractive, buy it for me? Or is the dealing room chatter, sell off, it's going to get worse? Our people are HNIs phoning and telling you, sell off what is there, I'll come back in February and decide.
Well, Lata, the most important aspect from the dealing room that we hear, and also reflected in the daily numbers that come, is the average 700 to 1000 crores of FII selling, right? And in that selling, you are seeing a lot of mid caps which are being sold, and those mid caps typically tend to see a lot more damage because of being less liquid in times like this. As far as the locals are concerned, I think their buying is right now just about matching the offshore selling, but it is always the trend of the offshore buying or selling which decides the fate of the market. Until the time you don't see FII selling getting over, I don't see this market right now finding support in the near term.
All right. Rajat, it's a pleasure speaking with you, although it was a somber reality touch. Let's hope 2017 will bring us better tidings. Thank you very much indeed for joining us. Have a great 2017, you and everyone else in Motilal Oswal. We take a break on that note. Thereafter, we are going to touch base with one of the sectors that actually did exceptionally well in 2016, the steel sector.